Real estate investing can bring big reward and big risks. So know your risks. Welcome to the Real Estate Risk Report, the show for real-world insight on real estate investment risk. Now, here's your host, Lance Peterson.
Thank you for joining the Real Estate Risk Report. I'm your host, as always, Lance Peterson. So today I have with me Andy McMullen. He is with Legacy Acquisitions. He's based in San Diego, California. Wonderful, beautiful San Diego, California. How you doing today, Andy?
Good, man. Good. I think it's a great place to be. Usually, in the real estate world, maybe not investing so much, but living just fine.
That's right. Yeah. I mean, I had a private lender on the last episode, who's also down in San Diego, and just depends on how you look at it, right? And I think maybe it's easier for a lender to say, right, they're sort of high and dry in first position. The equity guys, they're the ones who are going to sort of sustain any of that, ups and downs that occurs. But so Andy, why don't you share a bit with us sort of about your real estate investing journey? How did you get into real estate? What led you to it? And, what ultimately sort of, led you to become more of a, pro, where you form your own investment firm and that thing.
Yeah. So, in fact, it probably helped some people that when I started, I was definitely not winning. I started off kind of as a broker, actually, commercial broker, really kind of on a lark out of college. I didn't know what I was going to do. Thought I was going to be coaching basketball or something. I was done in LA. And I had a friend who had been interning at this kind of boutique real estate firm in Marina Del Rey. And I walked in this place that had about 30 property managers, a number of asset managers, brokers. And it was just like, there was just such a buzz. I probably too young to remember the movie, the first Wall Street movie, but I mean, there was just something about the energy of this place, right? And the way that they kind of talk, etc. So I was way over my skis, but I was able to be mentored by some really quality brokers and asset managers in that group, Pacifica Capital Group. And then kind of the draw wore off and the real world started to set in. So as you start, you're given this kind of draw, that basically keeps you on your feet as you're a young broker. And then when that wears off, it's basically sink or swim, baby, right? So at that point, I realized, the feast or famine model, and there was some great feasts, but there was definitely way too much famine. And I think it was probably in the season, maybe in my second or third year, where I really started to feel like there's got to be another way to kind of create some passive income in addition to this. A lot of the clients that I was working with, a lot of the people that I would, learn from would be giving these kind of passive checks that would slide across their desk. And we were invited to invest in these deals, mostly apartments, industrial office deals, but you got to have some dough, right? So, so that's kind of how I got my start. And then I hear you talk a lot about the education. For me, like just the library card and just consuming as many of the kind of investing books. Now I had maybe an advantage that I had some great mentors, but there was something about, like I could get an angle from this pro, and I could get an angle from this pro. And so over time, I'd always been kind of a reader. I was able to kind of figure some things out, and then flopped again, right? Like there's no way I'm not getting very vestifiable when I first start, right? There's like a lot of kind of, skids, but that's a little bit about my background, and we can get further into it if you care, but.
No, I mean, I think that's helpful, right? So it's like some guys do, like you said, like in your case, kind of come through the commercial side, the brokerage side, which is, like you said, it's sink or swim, feast or famine, but it is a great place to kind of get in into the belly of the beast, so to speak, right? Because you see what happens at that's the point, the buyers and the sellers, right? And really what's going on and understanding those dynamics. And I think that's just it, for many of the people who listen to this show, they didn't come through that door, right? They came through they were an entrepreneur that had a service business that had nothing to do with real estate, or they were a dentist, or, that sort of thing. And I think the cool thing we've seen now, right, is that we've realized that, hey, I mean, no matter who you are, you should try to figure out how to have, multiple income streams, and, I think this is that transition. Now it's crazy how long it's taken us to sort of I think wake up to this, right? Because I think many of the people in the generations before us, they had pensions and they worked at the same place their entire lives. And then this whole, IRA 401k sort of shift, right? Where it's sort of like, you're on your own, you need to save. And I think that, it makes sense now, hindsight's 2020, look back and realize that people sort of, they adopted a pensioner's mindset for, how they manage their wealth. And a lot of ignorance. And so it's been neat to see now, like you said, you saw those checks crossing people's desks, right? Like these are passive income checks.
I've never heard of Fund 5. Where is this? Where is this money coming out?
Yeah, exactly. How do I get one of those?
But it's so interesting that you say. So I grew up, both my parents were teachers. My dad was a basketball coach, and so they had kind of the salary, and we had the summers to do our thing. And it wasn't that they discouraged my entrepreneurship. I think they saw that very early on. But I think that American dream back then was like, you earn and then you get your house, right? And then you got your pension. And it's very kind of cut and dried in that way. And even now, as we kind of evolved into a lot of this, what I call horizontal multifamily, which is kind of the built to rent space, we see a lot of the millennials coming in now where that's not their American dream. Their American dream is to have freedom and travel and multiple streams of income. And maybe they have some income, but they don't have, and some of them, by necessity need to rent, but a lot of them are just of the means and they just choose to, because they can invest in anything they want on their phone, right? So I think it's a completely different mindset. And it did take a while. You mentioned the belly of the beast, because that's such a great description. Is like, back then you didn't have the kind of underwriting tools. So I've got my kind of 10D calculator, and I'm trying to figure out what IRR is. And I'm asking hundreds of questions that are all idiotic. And I get, there's kind of a male rhythm to that particular job that I was in. So it's a lot of like, oh, you idiot, that kind of thing.
Totally.
So everybody has a version of that, an inflection point. They look back and they're like, man, I'm just so glad that I wasn't afraid to ask that dumb question and propelled me forward, or give up, or you described it a number of different ways, like the origin story. There's an origin story, and then there's a huge number of kind of setbacks that, allow you to progress.
They do, and that's, anything that's worthwhile is going to have, some kind of learning curve. And it's, and things like this and investing, and you were in it, like you said, that all the real estate bros, they've got their own sort of language they speak, and it sounds Greek and to them, right? And so anyone coming in, if you're not okay and pretty self-assured and willing to ask the dumb questions and be, made, they're going to make fun of you. They're going to give you a hard time, right? You're not going to do it. And I think that's where we're at now. I just think people are just taking control of their financial futures and saying, well, I'm gonna have to ask some dumb questions. And that is where a lot of people, they start with sort of multifamily. I think we all sort of understand or maybe rented before. And, it's easier. It's a great place to start, and a lot of people obviously started by buying single family homes as well. So maybe for us, share sort of, as you've went on this journey now and where you're at, what is sort of your investment philosophy like today, when you're out there sort of evaluating opportunities? What is your sort of buy box, your strategy, the things that you're looking for, just at that high level? Like you said, you're in San Diego. It sounds like you're not super bullish on, buying stuff in your neighborhood right now, but
it's really interesting. You hear a lot about location. For me, it's about relationships. You've said that many times, the networking importance of it. But what we figured out was that the kind of predictability of investing. We were doing deal sponsors. We were deal sponsors in California for many years, Central and Southern California, and we still own some stuff out here. But with rent control being enacted, it became less and less predictable. And then, eviction moratorium, even before COVID, there was a lot of tightening. And so I'm not saying we will never buy in California. I think that there's some huge opportunities on the development side in California, just because there's such a housing shortage. But what we really wanted to hang our hat on was, let's partner with the best in class operators across the country, not the ones that are just good at what they do, but that have some community good that they're doing. And then let's give our investors a white glove service. So we like, multifamily, mostly in the Southeast, B and C, 100 units or above, we've recently transitioned, and it's certainly it's really kind of an extra layer to the multifamily space, which is the built to rent space. So
Yeah.
we're working on deals there in the Southeast. And we could talk about that more. I think it's probably a trend that's really going to help a lot of people, kind of the way that they look at things. But for me, and I'm sure it's about, that's what you're doing every day, right? Is just kind of, how are these jockeys treating their investors, and do they have the systems in place in order to deliver that strategy that they've put on that OM?
Yeah, no, I completely agree. I mean, it's always it's deal sponsor first, and it is, like you said, Andy, it's the relationships. And I think that, like you said, you referred to the millennials and sort of everything on their phone. I spent a lot of time explaining that to investors getting into the space, that because that's sort of how they think it should work, that it's this armchair investing, like it's Robinhood or hey, I mean, whatever, that sounds cool, and they've gamified it, but it really doesn't work like that yet. Like, I mean, we're not, maybe we get there someday, but right now it's important to understand for investors that it is very relational. Even if you are in San Diego and you're working with guys, in the Sun Belt or Southeast or what have you, you really have to pick up the phone no matter who you are. Now, for you, right? I mean, you're sort of, you're a pro. I mean, this is what you do for a living, and there's a lot of moving parts to sort of to build those relationships. Obviously, relationships take time, but I think it is important for investors, no matter who you're allocating your capital to, someone like yourself or whatever, like you've got to build those relationships. And like you said, it really is. It's about finding those that fit and you've got a good relationship with and you believe in, and those things. And really then it comes down to, do you think they can execute that business plan? And not what are the pictures pretty, or, is their website fancy, or, I mean, maybe they'll have those things, but really it's just believing in, it's just like investing in high-tech startups. I mean, it's about the team and as much as the idea. And so for you guys, then, like when you do that, especially like this build to rent thing, I mean, like kind of transition into that, it's kind of a newer thing. I know like home building's not new. Right. They've been doing that forever, but the whole notion of like building a complete development, for the sole purpose of renting it, it's sort of novel, right? And that means that, figuring out who you're going, I mean, a lot of guys are out there now running around saying they're doing build to rent because it's sexy, but they're not all created equal, right?
That's right. And it is interesting, and I've heard you talk a little bit about where you were kind of in the aughts, 2008, 2009, but I remember very early on, we were doing a development in Venice at the time, Venice Beach. So we had to retrade with every one of our buyers. It's a 35 unit kind of live work development project. And I remember, just having that kind of feeling like this is not coming back for a while, right? But it was almost immediate, where the same kind of Wall Street money that was maybe responsible, or at least partially, for the crash was the one kind of picking off these properties, scattered sites for 50 cents on the dollar, right? And so we've seen that for a while, but at some point there was still that kind of fear from a lot of that Wall Street money to be building anything. So for the last 10 years, we've had very little development. We've had population growth. We had very little development, especially in many of these markets. But then at some point, people just figured out, hey, look, why not? Because it's so inefficient for us to manage hundreds of these properties, these single family properties, and spread out markets, or even in one county, but spread out across, multiple property areas where they've got property management problems and efficiencies and calls, et cetera. Let's just build them right next to each other like we would a multifamily project, and then give them the backyard and manage them with the pool, with the clubhouse, with whatever that is, as if it was a multifamily project. And so you're seeing the Lennars of the world, who've been historically home builders, now building to rent as well. Blackstone, all of the kind of bigger players, Invitation Homes. But now you're also seeing kind of these like convergence of, Brookfield maybe connecting with Conrex Homes. And so it's still the early stages, I think, Lance. I mean, as you know, multifamily, Wall Street probably controls 50% of the multifamily market. There's really only 2% or 3% but they're controlling on the built to rent space because so many of these homes that are for rent are in scattered areas. So we need development, and they're not very good at finding things. So they'll let little developers like us go in, build it, stabilize it, and then they can, with their systems in place, create these real efficiencies on the expense side and push growth, right? So that's kind of a little bit about the built to rent.
No, I think that's great. I love how you frame that, because see, we talked about that a couple episodes ago too, I think, on the mobile home park side, right? I think it's important for your sort of non-institutional investor, right? Like, once again, your high net worth, your family office, is that where the real opportunity and where there's alpha, right? Your ability to sort of get outsized gains or above average risk adjusted returns, right, is in this sort of the opportunistic value add band, right? Like, in the reason why is because to your point, Andy, right? Like the institutional investors do not want to mess around with sort of development, right? Like it's a lot of brain damage. And it's not their core competence. They're good at putting their money managers, their asset managers are good at putting money to work, like you said, and efficiencies on scale. And so much like we talked about in the mobile home parks, where you go into this park ran by mom and pop and you basically stabilize it, where you've got, all the homes are owned by the tenants, they're paying, rent, and it's 95, 96, 97% occupied. They'll buy that, and they'll buy yours, and they'll buy everyone else's too, right? And so that's where it becomes stabilized and then becomes institutionalized. And that's like you said, that's what's happening in build to rent. So from the investor's perspective, you understand, like, these are, as these sort of trends occur, I mean, and everything goes in a trend, it's sort of fluid. That's where you get a chance to have the opportunity, right? Because I mean, the other thing that's come out in the last few weeks, and you probably saw this too, Andy, right? It's just the whole, they're trying to make it illegal to use your IRA to invest in something, private placements, where you have to, meet some sort of income requirement, like an accredited investor standard. And they're saying, no, you can't do that. And, on one hand, they're trying to plug sort of the Peter Thiel, Roth IRA that's worth $10 billion or whatever. But really what they're also doing is that's a lot of the Wall Street lobbyists at work, attempting to sort of restrict, the retail investor, to just their product, right? Like, no, we don't want you to have access to that. So it's just, I think it's things like that to understand that it does behoove all of us as investors, or high net worth investor, to really spend some time, like you said, Andy, like hitting the books and learning these things, because these are opportunities that once you can understand them and you get your mind wrapped around them, like build to rent, you realize that some of these are, I don't want to overstate it, but some of these are like once in a generation sort of opportunities.
Yeah.
Right.
And I've heard you say, about with LPs in general, that sometimes, LPs aren't willing to pick up the phone, right? And they just kind of expect to have some of these things that, it's just computerized. That deck looks good, return looks good, IRR's there, they own a certain number of units, let's just go. But what they're missing out on is what you just said, is let's have a conversation. Let's figure out a way. Wow, there's something really happening here that is being kind of flooded by Wall Street money, but that still has a need for people like us to come in there and really create an opportunity for our investors. And maybe there's a lot of alpha to it, but there are ways to mitigate these risks. And I know you talk a lot about it as part of the reason I love your show. Maybe create a little more beta than previously known about development. And part of those reasons is because now you can build these things, collect the rent for that unit. You don't need a a certificate of occupancy for the entire unit. You've got stickier tenants. You've got backyards where they have dogs and families, etc. You can build them in communities where they've got good schools. So there's an opportunity for people now to that are listening to this pod, and they're like, gosh, I don't know much about built to rent, but it's like you're looking for a car. Now you'll like hear it. You'll be like,
the reticular activator. Yeah, no, that's right. And I think it is. It's just, it's digging in and really, learning about these opportunities that are in the market. And I get it. It's sort of, that's how we protect ourselves, as humans in general, is just, things that are novel or different, we tend to sort of like sit on the sidelines. And I just think that, and I told you, Andy, before the show, and I think I may mention the last show that, some investors that are listening to the show are saying, now I'm just becoming way too risk averse, and I'm like, clearly we need to sort of correct, a bit on the show to say, that's not what I'm saying. I'm not saying where you just, you freeze and you learn so much that you don't, do anything. Right. But it really is about, digging into this stuff and learning more about what these strategies are. And in particular, and I think that's what you do, Andy, right, is like knowing that, hey, a bunch of these guys, might proclaim that they're executing a certain strategy. Like someone on the chat today hit me up like, what's a strategy? Like, what does that mean? And I'm like, it's the thing that the guys do when they wake up in the morning, right? Like if you wake up this morning and you consider yourself a lender, are you private lending? Are you a developer? Right? Because, or are you a value add guy, a guy who likes to take and reposition things and, and make them better and extract? I mean, those are, and you've been in the business long enough to know most developers, when you meet a developer, like a true developer who comes out of the ground, and you meet a value add guy, and if you get to meet like 10 of each, they're very different people, right? Yes. The developers are dreamers, right? More often than not, they're like guys who have these crazy visions about all this grandiose stuff. They probably wearing a lot of jewelry, got really nice cars. They just like everything to go big, right? And the value add guys are much more analytical and practical and pragmatic, and they buy stuff that's ugly. And, it doesn't mean that one is better than the other, right? But it's just understanding what it takes to make it happen is different. And
I think it's so key what you said about strategy, so you're kind of laying out the framework, and then the developer has his kind of own set of tactics, right? And the multifamily guy has his own set of tactics, and part of those, so you talk about a lot about process is like, what kind of risk are you willing to take on some of these? And you can't mitigate all of it, right? It's kind of like, you're dating a girl, and if your thing is like, oh man, I'm never gonna date a girl who who doesn't like movies again, because I'll never end up at the theater, or whatever that little dumb thing is. I'm not gonna date the girl who's So you got a package here. You can't have it all. Investor understands you cannot have it all. And even some of those things that you do think you have, whether that's kind of the contingency reserve that's in place, or you love that it's 100 bips above the cap rate's 100 bips above where the market cap rate is, or the growth is there. Even if you have some of those things in place, you still are at the mercy of what is the government doing? What are interest rates doing?
Exactly right.
You're never protected in this real estate game, and that in 2008, there's a lot of smart people I've heard even on your show, where we remember when we were, and we just thought that was the new normal, right? I even experienced when I first came into the business basically the .com space, which was like, oh, of course, Webvan and pets.com of course they're $1 billion companies. Don't you guys understand that it's not now about, well, how can they achieve this for their investors? It's about where will they be in 20 years? In fact, we still probably haven't really even figured out the Webvan yet model. Amazon kind of has, but so anyways, I want to express that to people, that you can only mitigate a certain amount. And I did as well. I would come, I had a problem with kind of getting off ramp and staying way too long in one off ramp, right? Like that's my corner. And so instead of getting back on track with the big picture stuff, I'm playing way too, because I'm competitive. So I'm playing way too much in this one thing I really believe in. And so I really try with our team to let's focus on like a passionate idea, but loosely held. Like we're constantly taking in new data and making new assessments. Some of those things we thought were risks are less risky now. For instance, construction, maybe costs. Some of those things that we didn't think were as risky might become more risky now, which is like, whoever thought our IRAs would be threatened. We thought last administration it was going to be much easier to raise capital, right? And now that's gone. So there's things that are always changing, and that's why a lot of the people that are just focusing on reading books, that stuff happened a year ago. You can get some big picture ideas, but you got to talk to people, and you got to really kind of engage with people to learn.
Yeah, you nailed it, man. And I think that's, I commented on some I forget the guy who posted this morning, but something really thoughtful on LinkedIn, and just about GPs and LPs, and people are getting into the game, and it's you go for the big eye, and it kind of goes to what you're talking about, like understanding you're an investor and someone presents this deal to you that's got like a 23, 24, 25 net IRR to the LPs. That's code for like lots of moving parts. You know what I mean? There's some risk there, right? And they go into this deal thinking that everything's going to go swimmingly, and they overlook the fact that that's what you signed up for. You signed up for a guy who's doing a deep value add deal with tons of moving parts, going to renovate like 400 units. Like, that's what you signed up for. The sponsor knew what he signed up for, right? Like, he knew what he was getting into. It's that you didn't know what you were getting into, right? But and the piece with that is just, it's understanding that, as the LP, you need to think through that and think, what am I okay with? And what am I getting into? And like you were saying, it's understanding that there's certain things you're going to have to give. You just need to make sure you're comfortable with what, with what those things are. But certainly when you think about it, it's like speculating in the stock market. I mean, that is a crazy ride. In the real estate game, at least like, it sort of cycles on you, but you sort of can at least see what's out in front of you to some degree.
I think that's part of what I love about what you do and your story, is that one thing that you can control, and that one thing that you should not capitulate on, is the person that you're working with, right? And you talk a lot about track record. That's true, but the character part of it is such a big piece of this, because there's investors that are going to lose, and there's deals that are going to fail. And if that particular operator is in this game for a long time, he knows he's going to have some losses, and he's going to have to make you whole, right? And there's some people that aren't willing to do that. I've been in LP deals, I'll say, where you talked about philosophy and kind of, my box. A lot of it comes from experiences on the LP side too, where I just remember, the frustration and feeling like these guys are winning technically, like deodorant's a bit, of course, winning's the best deodorant, but they've also had a cycle that's just been kind of a tsunami. Yeah. But if I haven't heard from them for months, if I don't know what's going on in the deal, the fact that they come back and they say, hey, it's great, we're exiting, and you're going to get your 15% or whatever that is, I'm not going back there, because I don't feel like those systems and processes are in place to get me comfortable. And I remember as a young operator too, how hard it was. You talked about all those moving pieces. You can't get all what you want, but if those aren't accounted for, and that operator, if he's just focusing on the deal, executing his next deal and the strategy, and he doesn't get anything back to you about it, then you have no idea where your investment's going. You don't have idea to control expenses on the construction side. You don't have idea to figure out what's the variance report from what you thought you were getting into to where you are now. So all of these things, I just think they kind of almost always come back to the relationship, don't they? They almost kind of always come back to the person that you're betting on. And that's why I think just what you've done is so incredible, because, we all have failures in our past. I hope that Verivest is not saying, hey, you can't fail. What they're saying is, I know that there's people that, because they have failed, and they've made it right, and they've basically made these decisions based on their experiences, that they're steeled to move forward when things go bad. The people at Verivest is less likely to kind of endorse are the kind of younger ones that don't have systems in place. And I'll invest with young people. I'll watch them. Our fund will invest with young people. I'll watch them. But I do have a certain kind of criteria of track record that's really important to me.
Yeah, I completely agree. And I'm glad you brought that up, right? Because I mean, for me, that's part of this whole thing of realizing that, like you said, we need to be held accountable. And then unfortunately for us, it's sort of where we've gotten, where I'm like, well, maybe there needs some public accountability, right? But it really is that, like you said, these are relationships you have. And so even though you're, hitting home runs and, you're just killing it on the deal side, but you're not communicating, that's just disrespectful, right? Because that means you're not appreciating what it's like to be the limited partner who's abdicated all decision-making authority to you, right? And so not keeping them abreast as to what's going on, it's that simple. It's disrespectful. Now, and also too, it's with the fact that, and I've run into this a lot, Andy, when we've rolled these services out, is on the Verivest side, it's like people don't want to come to grips with the fact that, they maybe had a failure, right? And I'm trying to convince them, like, don't you understand that being transparent and being willing to sort of put that out there says a lot about who you are.
Yeah.
Right. Like, and it's character building, right? So we all have room to grow and to get better, but that's what it is. Like, okay, like, I'm not perfect, man. Like, dude, I make mistakes all the time.
Yeah.
But like, I'm willing to put it out there and say, like I went to college and I just dropped out because I liked to party too much. I'm like, it's an expensive party. I was telling an investor of ours, we're raising money for Verivest. I was telling him that story, and she looked at me like, I can't believe that you were willing to admit to us that you're like a college dropout and that, like, college didn't work for you. And yeah. I'm like, but why would I care? I'm like, well, why would I care? I'm like, I'm not saying that it's like, I'm for me, it's like, why would I be, if like, because I think she's saying, like, I should have dodged the question, right? Like, move the topic to something else. Don't confront the failure, right? Or whatever. And I'm not saying, it's just, for me, it's like, hey, I tried it. It didn't work. It just wasn't my thing. Yeah. I mean, obviously you have to deal with that, right? Like, especially when you're younger, like, well, I didn't, where'd you go to college? I didn't go, but it's like, I'm not going to like lie about it.
Yeah. And but even from that point of view of the way that she was looking at it as compared to how I would look at it or other people would look at it, to me, there's not, like, if my son told me that he's got a business and he's got an entrepreneur and he college, this thing isn't for him, but he's doing whatever it takes to learn the things that he wants to learn, or he wants to try whatever that is. I think that college is sometimes overrated, but I get what your point is, that we have these warts, or what other people consider to be warts. And we become so kind of, in this like television kind of, laced up world where we just have this perception on Instagram or Facebook, how we want people to see them. But that's not how people emotionally invest. It really isn't. Like one of my first syndications, Lance, was just an absolute disaster. And I think about the reason that it was a disaster were because of many of the things that I've kind of figured out in vetting operator these days. Was we didn't have the risk mitigants. I try to do way too much of it myself. I didn't have the great team. We didn't have a fantastic, exit plan, right? And so those are big things, right? And yeah, we're able to get out of it okay, but again, a lot of it was basically because of the market. But property managers, trying to figure out exactly how we're going to have the right accounting people in place so that we can get reports that are out quick enough. People don't understand that there's just so much involved in something like that as due diligence, management. So I could say that with shame, like this happened to me 15, 20 years ago. Or I could say it almost like with pride that I didn't lose investors' money. I failed certainly along the way, but I didn't lose investors' money. We came out of it. I learned a ton of it. I basically got a story to share and help other people that are trying to do all of this themselves. It's part of the reason I'm so big on partnerships, which I also think gets a bad rap because we've almost all had a bad one.
Yeah.
But the reason that we've had a bad one is not for the reasons that we think. The reason that we had a bad one is because we didn't do our job in vetting them and figuring out how they would respond to this and asking the right questions and having our first, fight, or what's their say-do ratio. A lot of times we get into partnerships thinking, man, I just love Lance, man. He just seems like such a cool dude.
Yeah.
When, he could be a cool dude and I'm a cool dude, but his skill sets don't complement mine, right? And those are bad partnerships because now we bring a third partner in, split up the pie, and maybe that partner works. So anyways, I know I'm going off on a tangent.
No, but that's a good point though.
It's part of our story are these warts, Yeah,
it is. And I think that, and to your point, it's that if you're a passive investor and you're having, once again, because this is the theme of this, right? It's like, it's building relationships. It's being willing to go out there and have these, ask the tough questions, the dumb questions, whatever. I mean, if the counterparty is basically saying they're perfect and nothing's ever gone wrong, they either haven't done it long enough, or it's just they're withholding information, right? Like it's just it's just there's so many moving parts. And I think it's just that's the thing to look for. And I think, and also too, it does come down to, it's like all of us being more gracious and willing to, give space for people. Because like you said, that lady, the investor, right? She's just sort of like, she clearly is the type who's not really going to steer in anything that would, her own failures in life, because she's embarrassed by them. And so, but it's like when we're talking to other people, it's like, and if they've never had anything go wrong, then it just seems, I just don't believe it, right? Like
it's definitely a flag to me. We interview a lot of kind of either they're our partners through our fund, or so a sponsor that maybe we'll invest with, or me as an LP. If that's the answer, which is, well, I just can't remember. I've never been in a deal, honestly, Lance. I've never been in a deal that went smooth, whether it was the lender that changed their mind or had to bring on another, or whether it's due diligence items or the seller was tough. It's just not realistic for anybody to be in this business without having it. And that's why, again, I come back to your platform, but it's not about a pristine operator. It's about kind of a steeled operator with character,
Yeah, it is. And same with us, Andy. I mean, I can't think of any deal we've ever done that just was flawless and perfect. Like it just, that's, and I guess that's what we're trying to get at, is just like, think about it, where the opportunity lies for, mere mortals to invest in these deals is sort of in the segment where there are some moving parts, there's some hair on the stuff. Like that's what creates the great opportunity. You need to understand that, right? You need to understand these things, and accept them, right? And then go find people who are of high character. Because people, this is part of the issue. Like on Verivest, what I'm trying to say is that all I'm trying to do is remove friction from, because I know that the transaction is trust. It's, you don't know this person and they have an opportunity for you to invest your hard-earned money into the deal. The friction is that, who the hell are these people and can I trust them, right? Like before I'm going to wire you money, I need to figure that out first. So for me, I'm just trying to figure out like what stands in the way of you deciding you trust this person. And that's what I'm saying. Well, is your background clean? Yes or no? Whatever claims you're making, whatever your track record is over how small or, or how long you've been doing it or how short it is, it just is what it is, right? Can we validate those things? And after you invest, are we just making sure that everything, all the money goes where it should go? Whether or not the whole thing works out well, I have no idea. That's a whole different animal, right? That needs to be. But to me, it's just removing friction. So that allows, and my whole thing is that I just know that there's a lot of overhead that goes into that for investors, of this worrying and I don't know the answers to those questions. And so they're focused on the wrong things when they should be doing like what a lot of the pros do, like yourself. It's just, they really get down to the brass tacks. Like, who are these guys? Who's on the team? What do I think of the market? How about this project? What are the municipalities like? You're really getting down deep into the things, and you're focusing your efforts on the stuff that matters. Cause that's really, like you need to understand those things. And I think that's where that's what's cool to see, is like people that do get into it, they realize like, it's a lot of fun. Even if you're just a purely passive investor. I mean, it's funny to see the hobbyist behavior that I've seen with investors over the years, where they invest and it's like, they treat it like it's a hobby. It's like fantasy football, but with like real money, it's pretty neat to see. So we're running late here, but where can people find more about you guys and Legacy Acquisitions and reach out?
We got some great resources for passive investors, some calculators, some maybe it's packets or ebooks that we put together on underwriting on our site, legacyacquisitions.com. I'll find me on LinkedIn. I love talking with young up and coming investors, telling my war stories. I feel like maybe there's some use to all my F ups. So reach out to me.
Cool. Sounds good. Well, thank you so much for your time, Andy. This is a lot of fun, and hope to chat with you soon.
I had a great time, man. Thank you so much for having me on, Lance. Talk to you soon.
Welcome.